Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks. And in this episode, we're going to take a look at the double top reversal pattern. So we're going to go back a little bit more into some technical analysis basics and share with you the double top reversal pattern. So first off, you might be wondering, well, what does it look like? Well, it looks like something like this. So if we go in and we create kind of a two-peak system, okay, this is our resistance level. So this is kind of our first swing point, and this is our second swing point. Okay, so we have two swing points that creates kind of a double top. Okay, now what happens with these double tops is you'll also get kind of this supporting level here under the stock as well that's being created. So what you're looking for in these patterns is where is the strength and where is the weakness. With this pattern, you have the initial trend is to the upside. And what happens is that as we move to the upside with the stock price, well, you don't have enough buyers. So the weakness comes in and people start selling or taking profits. Then more people come back in thinking, hey, well, it might be a good value. I'll go in because the stock's been heading higher for quite a while. I'll go back in and buy some shares. And that's what happens. And then it goes into the second top, but not enough people come in. And when not enough people come in, it reverses. And that's why you get that second top, you get the double top, and then stock comes back down. Now, from time to time, it may test these levels here and get some little bounces here and then roll back over. And then eventually you'll see it roll further over into lower prices. And that's why it's known as the reversal pattern. So some things to really watch for as you're looking at this is that you want volume to pick up on the selling movements. That's where the trend or the pattern confirms itself a little more. So anytime you're getting these selling off movements, you'd like to see a little bit of higher volume in that spot, especially as you get into the break. And if you're looking to enter in that position, one of the entry points could be just after it breaks that support. So that could be your initial entry point if you're shorting the stock. Okay. Sometimes what also will happen is after this break, you might actually get a retest of that support level, which is now resistance. So as you retest that level, you'll get that rejection. And if you missed that earlier entry opportunity, you could get a second entry opportunity right after. So that could give you another opportunity to short the stock. If you're looking to buy on value, well, this is a little bit difficult to do with this pattern because you're looking for it to go much lower in price and then, give it some room and time. How long does it take for this pattern to evolve? Well, sometimes it could happen in 2 to 3 weeks. Other times, I would say more or less 4 to 6 to 8 weeks is a little more common in the stock market world. So if you're looking for a 2-month kind of time span, that's a little bit more healthy, or even 1 month around there. If you're looking for the distance of how far this pattern could go or the projected move, basically take the peak right over here, draw a line down to kind of the support level that you have over at this point, where we hit the support and bounce, and that kind of gives you a distance. Take that distance and move it right at that break and go again right there. So your projected move is kind of right at that same amount, and that gives you an indication. Sometimes these things could go a little bit lower, sometimes they're a little bit shorter. So it just depends, but that's a rough area because it's the amount of buyers and sellers that are over in this level will probably be around that level. And that's why you can't be that precise, because that may change. And some people may, get in it earlier. Some people may get in it later. Some of the issues that happens with this pattern is sometimes it evolves into a kind of a triple top. So if you look at kind of another pattern here, you could get a triple top in this pattern as well. Sometimes you could get 4 tops. So here's 2 and here's 3. And other times this pattern may even break out kind of to the upside. So instead of bouncing here and rolling over, you may get this distribution and consolidation for a sideways. And this pattern could slowly start moving here to the upside and eventually move higher. So when you see 2 points where the stock is rejecting, it doesn't mean all of a sudden it's a double top. What you're really looking for is volume here picking up to the selling side and the selling pressure. And if it is, that could give you an indication that there's more selling pressure that's coming in. And that could mean that, hey, with more selling pressure, you could get this thing to roll over even further. So that's really what you're watching for. And in some situations, it does have a double top, but they actually will continue because you get enough consolidation. More buyers will step in because of the digestion, and it actually goes higher. Your whole goal and point behind this pattern is to recognize, hey, I see two peaks. That means there's resistance, and that means this is a little bit of a difficult level to break through. And if that's a difficult level to break through, well, if we continue moving lower and we break below that support level, that could be a longer term downtrend where I may just want to hold off on the stock. On the other approach is if you're looking for a bullish movement, you could, of course, wait for that to break out that resistance level. And this could be a bullish or kind of a buy area up there, which could happen from time to time as you're recognizing, hey, there's two peaks there. Well, it breaks out and then it goes higher. So just because it's a double top doesn't mean it's going to move higher or lower, but it will be classified as that pattern, double top reversal, once it starts moving into the other direction that it came from. So here it's starting from that downward, moving to the upward area, and then if it reverses, then it'll be just classified as a pattern. And the whole point behind the patterns is just to name the chart movement, a way to easily reference one thing or another in our discussions. Otherwise, as you look at the stock, your main goal is to make a decision of if that stock is going higher or lower. And what you're really looking for is where is the weakness, which you can get and understand from the volume. Is it selling off on huge volume or weak volume? If it was weak volume, well, you might see it digest and actually move higher. So let's take a look on screen at this double top reversal pattern. Here we're taking a look at Groupon. And as you can see from the stock, we first sold off around 2012, and then finally we're trying to move a little bit higher into higher prices in 2013. We didn't do so well here, and you can see that around August, September time, and then also November time, we've created kind of two peaks. So at those two peaks, we have a little bit of resistance, and this is our kind of double top. If you look at a little bit of the support level that we have here, we have a slight support that gets retested, specifically at this kind of swing point at lower prices, right around $9. So our high range is just right above 12, and we're moving into from 9 to 12 range. The stock broke through and then came back up to retest that $9 range and then continued moving lower. You'll also notice the volume, how big and accelerated it was on that break. So it did pick up. Initially when we were digesting, the volume did decline just a little bit, and then we picked up in a big way after that, at least with one bar, and then slowly with a few surge in prices or surge bars later on in the bearish sense. So that's kind of our double top right there. As far as our distance goes, you can see the distance from here to here, and then you kind of take that and you can see the projection will go there. Now, Groupon actually ended up going much lower than that, but as far as that pattern goes, you should expect a little bit lower, but it didn't work out in this case and scenario. If we look at another example here, here's another double top example with Trip. So again, we're going in from lower prices, moving into higher prices. We get to a certain peak. Stock, as you can see, was very extended at that time. It just moved too far too fast. So you created one peak there, and we'll just draw a line across, and you can see we created a second peak a little later. So once we digested this move a little bit, moving sideways, when we got into this second peak, again, there was just not enough volume, not enough juice. Notice that volume was declining. We almost created a bowl-shaped pattern, and then we started to pick up volume, but it was the bearish volume, and that's what created and made the stock kind of roll over. So your shorting opportunity would have been right there. It didn't last too long because we got a little bit of positive news and insight shortly after, but then with time that stock eventually created another double top that rolled back over and created further lower prices. So as you can see, sometimes they only work for a short period of time because you get more news and hype, and then later on, you'll get that further rollover. And that happens with many patterns in general. It's not that they all work out perfectly, but just to show you what could happen, this is another example. Let me show you kind of a triple top example so you get an idea, or even a quadruple top. So here is our example of STX. We're looking at the year 2006, 2007, 2008. You can see the stock had a really tough time breaking above the 2750 range. And we created kind of, between those few years, a triple top. And because it was not sustainable, didn't have enough energy, well, that stock rolled over. So it tested a few things, and finally there's your break. So your entry point would be right around this point, which would be about $18, and that stock continued into about a $3 range. So think of that massive sell-off that happened there. So anyways, that's basically a triple top, very similar to a double top. You can see it was moving to the upside for a short period of time. We did get a little bit of acceleration in 2003, very steep, so that's why it came back down. As we continued to move into higher prices, we got that triple top, and eventually that stock, because it couldn't break through to higher prices, so if it can't break higher, it's going to break lower, and that's what happened. We broke lower, that stock based for a bit, and then eventually climbed to further higher prices or back in the triple top area. All right, so I hope this pattern was helpful for you to learning and understanding the double top and maybe even a little bit of the triple top. And if you like this kind of video and you want to see more great videos like this, then go ahead and subscribe to our newsletter list by clicking the link right over here. When you get there, enter your name and email address, and we'll send you new videos as they are released, along with some discounts and promotional material that we have about our courses, new books that are coming out, and some other things that I'm working on. Or you could just subscribe on YouTube by clicking the face icon right here, and then you'll get notified through YouTube as new videos are released. Thanks again, and I'll see you next time.